Folks, I know a lot of us, myself included, are always on the watch for the recession. In fact, if you watch my channel for the last couple of years, I have been clearly wrong about when a recession was going to start. However, after the disaster, the horrible, the atrocious Starbucks earnings, where US retail sales were down or store visits were down 7%, China was down 11. They missed revenue, missed earnings, lowered forecast, disaster, disaster, disaster. I wonder, is this the first sign that the consumer is tapped out? I want to have this conversation with Matt, the mortgage guy, because I am curious, since he has been in the business for a long time, is very good at what he does. I want to ask, are the people that are applying for mortgages credit profiles getting worse, maybe getting better? I don't know, but that Starbucks earnings fall was a disaster, and we may be in a recession right now. What say you, Mr. Matt, the mortgage guy?
This is a great conversation to have because I've been saying it for a little bit of time now. The conversations I have, and call it a couple dozen applications that me personally am taking, not to mention, company-wide, the hundreds of applications that we're taking per week. What people's personal finances look like from my perspective and my conversations doesn't align with all the rosy reports we keep getting about economy's fine, jobs are fine, people are fine, because I think numbers can tell you one thing on a report. What numbers don't tell you is this person is adding to that credit card balance every month. And they went from 4,500 balance to 6,500 balance to 8,500 balance on a credit card with the $10,000 max, because they're running at a negative $2,000 a month because gas is more expensive, groceries are more expensive, the rent is more expensive. And so numbers aren't going to show that yet because people are creative. People are going to find ways to make do. So, as a mortgage broker, pre-approving people, you get very intimate with their finances, right? They get financially naked in front of you, and they have to figure out what they qualify for. I can tell you with absolute certainty, Mike, I've had more conversations around current 615 credit score. If you got to 640, it's going to look a little bit better. We can still do a loan at 615. The biggest factor that's pulling people's credit down, Mike, is debt load. And so I can tell you that before, financial ruin or missing payments or foreclosure, like any of that comes, throw it on a credit card. Let me see if I can float this for a few months. Let me see if I can get through, because better days are ahead. I think we're all guilty of that to a certain extent, right? Myself included, right? I didn't think when we went into Q2 2022 in mortgage that we would be in this housing, you've called it depression, less transactions happening, right? Like I was like, I'll get through a couple quarters and 2023 is going to be a blast. It wasn't a blast, right? And so I'm seeing that as a whole, and it's interesting because I do think that the average consumer is worse off than they were a year ago. Many people, if they really stop and think about it, are much worse off than they were before we printed a bunch of money. And that's probably a whole new conversation.
It's really funny because, I don't know if this is true, but it's an educated guess, so I'll lean into it. I believe Starbucks as a brand leans higher income. And history says that the higher income folks have higher discretionary spending. There you go. There's proof right there. And if that's true, I can only imagine that the debt load, or it's either the debt load or people are getting scared about the recession, or both. That is caused. I mean, you can't have that disaster of a quarter at Starbucks and not think a recession is coming.
Well, what's interesting to think about, Mike? I'm going to pose this question to you because I'm just thinking out loud and thinking through it. The people with the least amount of financial means, the people that don't make as much, whatever, I think that they crack first, and then the people that have more discretionary income, me and my Starbucks, crack a little bit later. So, like, what sign are we seeing that the 99-cent stores went out of
Yeah,
business, right? And
exactly.
then Starbucks is having a bad quarter. I think it starts to flow upwards, and you see more and more people with more income, more availability on credit cards, they can float a little bit longer. They can hold
Yeah.
on a little bit longer. But if 99-cent store broke and then Starbucks broke, this is a wave that's coming.
Well, I would argue it's here, right? Because when you look at the consumer, we drive the economy. And if you just divide the consumers into kind of above and below the median already cracked. Look at the dollar stores. Look at people trading down from McDonald's. McDonald's used to be the treat. Now they're not showing up. Now we're seeing Starbucks, Lululemon, other brands that clearly lean higher discretionary crack. And then you want to talk about the ultra wealthy? I read an article yesterday about yacht sales. New yacht sales are down, but now they're seeing just a huge inventory build in used yachts. Now, again, you don't have to feel bad for these folks worth 10 or 20 million bucks, but if they're even getting rid of liabilities like yachts because they don't want the slip cost or the maintenance cost or whatever it is, I think this screams that I think we could be in a recession right now. I mean, just think about it logically. The consumer is rounded to 70% the economy. The low end is already tapped out. The above the median discretionary is not buying the next Lululemon. They're not buying the next Nike. They're not buying Starbucks. They're out. And the other guys are raising cash. This is not a sign of economy doing well.
Right. And I think too, the way I look at it, like, how can it not be in trouble if people make the same amount of money? We already know the data's shown for decades that people live paycheck to paycheck. The vast majority live paycheck to paycheck. If you just click and make everything 30 to 40% more expensive on somebody who ran at, a net negative or net break even on their monthly budget, that can only last for so long. Yeah. You can't bring 5,000 in and spend 6,500 forever. Eventually, it's going to break.
Folks, let us know in the comments below. Are we in a recession right now? Q2 2024. Simply yes or no. Let's blow up the comments. Let's get everybody going. Like, subscribe, comment, become part of the family. And Matt, where can somebody reach out to you if they want to get pre-approved, or better yet, just ask mortgage-related questions?
Go to greatmortgagebroker.com. It's the best place to start. We'll connect you with somebody who can answer your questions and get you started. If an application and a pre-approval is the thing, great. If just an intro call to see where you're at is what you're looking for, then great. Because, when it comes to finances, people tend to not talk about it enough. And if real estate is anywhere in your future, you want to talk about it. You want to get really comfortable figuring out what you qualify for. It still blows my mind, Mike, and this is my call to action for people, that, they want to do the least amount of work possible, and they want to give as much and receive, or they want to give as little and receive as little kind of interaction and feedback as possible. Just give me the letter that says I'm pre-approved. I do not recommend that. And I'm seeing it, like I always have, where people don't stop to look, analyze, discuss with significant other, what can we truly afford? What is a monthly payment that's comfortable to us? You don't want to have that conversation 2 weeks after you've got a signed contract on a purchase. Mike, that still happens. And trust that me and my team are trying our darndest to say, here's a video version of that Excel spreadsheet. Here's a conversation about it. What about a Zoom video, text message? And then 2 weeks in, well, I didn't realize my payment was $38.24. Well, I've shown it to you 4 different ways.
GreatMortgageBroker.com, folks. You won't be disappointed. Ask questions. Matt also has an amazing YouTube channel called Matt the Mortgage Guy, where you can just go get educated on mortgage, all the various vocabulary. He is doing yeoman's work. Thanks, brother. Take care.
Thanks, Mike.